Hello and welcome to this very special ET interview, and it's always a pleasure and delight to bring on board Mr. Anish Shah of Mahindra & Mahindra. Now before I go to Mr. Shah, I just want to set the backdrop here. Mahindra & Mahindra has been one of the best performing auto stocks not only in India but in the world now. Mr. Shah, ever since he took over, his ability to really think out of the box, make the tough look easy, come up with simple yet effective ideas and really create a lot of shareholder value, I think is itself in a case study. So after this really dream run for the stock in last couple of years, will this dream run continue? Or given where the economy is in terms of a slowdown, the core business of Mahindra & Mahindra will also get affected. What are the new challenges? What are the new opportunities? What are the growth gems? And what are the scalable factors which really could have an impact on Mahindra & Mahindra as a group? And how are they likely to create value for shareholders going forward? Let's take that engaging conversation with the man himself, Mr. Anish Shah of Mahindra & Mahindra. It's been a fantastic patch for your shareholders. I was looking in the morning, the stock is up 90% in last 1 year. That must be making you happy, right? Or very happy.
Good morning, Nikunj, and Happy New Year to you and all your viewers. It has been a great year, and it's been one that has capped a series of years actually, where we've built the company. For us, it is important to build it in the right way for the long term. So while we do get a lot of satisfaction to see that growth over the last year, I look at it more as a step in the right direction.
So this momentum will continue?
This momentum is one that should continue because, as I said, we're building a company for the long term, and we've got all our businesses today essentially firing on all cylinders. Yes, there is some work to be done in a few areas, but that's par for the course at this point. And we are essentially seeing the outcomes that result from the efforts that all our associates have put in. And that is starting to deliver results for us.
The economy is slowing down, and Mahindra & Mahindra is growing. You should be growing in line with the economy, but you are going against the economy. Why is that?
So if you look at the last 4 to 5 years, we've seen lots of challenges. We've seen COVID, we've seen all the supply chain issues, semiconductor issues for the auto industry. We've seen growth issues as well. So from that standpoint, we believe that if we build a truly strong company, then it has to grow much faster than the economy. Because if you can create customer value, if you can deliver that value in a way that the customer experiences a wow every time we deliver that, it's really going to enable us to gain market share. And that's what is driving the growth of our company right now.
The unique positioning of Mahindra & Mahindra has been market share and leadership in the SUV market and in the tractor market. I'll start with the success story of SUV. It's been a resounding story which needs no introduction. You are growing in double digit. The industry is growing in single digit. At what point in time the base effect and the general environment in the industry could hit you?
So we have a 23% market share in SUVs. We have a 44% market share in tractors. We have a 49% market share in LCVs. So in SUVs, we still have a long way to go. There is a lot more share that we can pick up. And for us, it is creating outstanding products. And what we've just launched recently in electric vehicles has captured the imagination of customers. And the feedback we get is very, very strong. So therefore, we don't look at industry growth rates at this point in time. For us, it is about how can we create that product for the customer that enables them to take a product at a much faster rate than industry growth.
Well, your market share is 23%. The SUV market share in the overall kitty is about 50% plus. Historically, we've seen that when a product category goes between 55 and 60, it peaks out in terms of penetration and market share. So could that be a challenge for you?
We still have, again, a long way to go, Nikunj. So from there, yes, SUV may peak out at 60%. It may not, because there are different forms of SUVs coming in now as well. And the vehicle really offers a lot more to the customer, and which is why we are seeing that growth in SUVs. But beyond that, in any category, it's about consistently delivering a very high quality of products. And that is something that our team has been able to do over the last few years. It's not been one product that's been a huge success. There have been a series of them. And we've seen the kind of customer feedback and kind of customer bookings that we've got for every product. And that's really what's driven growth in auto business.
Discounts are back, and you can now, as in customer, demand your price when you're buying a car. What's been your experience? Are you giving discounts which are bigger than what you've ever given?
Well, I can just look at one factor. In the last 4 years, no one has asked me for, can you help me get a better discount?
Okay.
Right? The questions have always been, can you help me get my car faster? And the whole narrative from discount has really moved to getting the vehicles, and that is in one way a positive for us as well as a negative, because we have not been able to fulfill that part of customer demand because it's been far greater than what we had expected. And we have triple capacity, we are putting in more capacity as well, and that has helped us get much better on this front. But there's still a little more we have to do on that.
So you're confirming to me that there's still a waiting when it comes to Mahindra products?
There are some products where there is still a waiting, yes.
And what is the average wait?
It differs by product and by variant. But we've tried to keep that down to ideally not more than 6 months for anything, but there are some that are slightly over that at this point.
Mahindra and Mahindra, I'm using the term, has been on a blitzkrieg of new car launches. They've really captured a customer's imagination from high end to low end to entry level. How have these new launches helped you?
I think the new launches have really changed the perception as well in terms of the kind of quality of products that we can deliver. And by we here, I mean not just Mahindra, but also India. And today, we've got R&D in India. These are made in India vehicles. And a lot of feedback that we get is that these are comparable with the best vehicles around the world. And that's a very proud feeling, to be able to create that quality for India, because it's changing the perception of where India stands on the global map. And this is what will enable manufacturing in India at scale. Because for us to be able to build world-class products in India and then export them to markets around the world is going to be a key step forward in meeting the Viksit Bharat goals that have been laid out, which are very ambitious and one which I feel are great from an Indian standpoint.
You've always stated in the past that we will let the customer decide what they want. We will make world-class products, and the customer will decide whether they want ICE engine, they want an EV engine. The fact that you've had good launches in the last couple of days in the EV portfolio, are you getting a sense that which way the customer is ready to tilt or pivot?
I believe that the customer will continue to make those choices, and some will prefer ICE, some will prefer EV. It's the same question that had come up in diesel versus petrol, and there are some customers that will continue to prefer diesel, some will continue to prefer petrol, some will prefer EV. The good part is that the quality of all of these vehicles is much higher now. Diesel vehicles at one point in time had the stigma around emissions, but with BS6 coming in, the emission norms for diesel are so stringent that the quality of the vehicle is very, very good, and the emissions are very low at this point in time. So it's really a customer choice on which powertrain they prefer. And for us as a manufacturer, it's being able to deliver high-quality products in each powertrain.
I respect that, but the fact that you'll have to start planning your capex in investment would be based on your initial understanding of the market. If you think EV will do well, you will tilt your capex there. If you think ICE will continue to dominate, you will have to put your capex there. Where are you planning your incremental capex within the autos?
So for us, it's about having a set of products, it's about new launches, and then the manufacturing capabilities. A lot of manufacturing is fungible, because a paint shop is the same, whether it's an EV or whether it's ICE. And similarly, a lot of manufacturing lines are fungible as well. Yes, there are some changes in components that go in. So planning is important from that standpoint, but that's where we continue to try and look at where customers are headed and then build capacities for that.
I'm going to change gears in this case and change gears away from autos to the other businesses. I just want to bring this point out for our viewers that 2021 was all about getting the house in order. Which is that identify businesses which you need, businesses which you don't need. Businesses which you don't need, you decided to part ways. 2022 was about identifying and growing the businesses you need. In that same time, you also incubated new businesses. So do you think next 2 years would be about scaling up the businesses which are new? You're calling them growth gems, but I'm calling them new businesses, and they will start scaling up now?
So that's right, Nikunj. We started with essentially a focus on capital allocation because it was essential at that time. And we spent about 15 to 18 months doing that. We exited a large number of businesses, and that put us on a very good path to be able to pivot to growth. As we pivoted to growth, we identified our approach to different businesses we have, establish and benefit from market leadership in auto and farm across all segments that we play in, deliver full potential in Mahindra Finance and Tech Mahindra, and build our growth gems and enable them to grow 5x over the next few years. That has worked very well. And for us, over the last few months now, we've started to take the next step, which is deliver scale. Because we're starting to see many of our businesses grow at a fairly rapid pace. And we now want to build 2 billion, 3 billion, 5 billion businesses from amongst our growth gems. And we feel there's great potential to do that.
The shareholders always want something more. They loved so far what you've delivered, which is consistency, scaling up, strong focus on cash flows, and you've not taken debt. But now they're looking for innovation. Which are the companies which are on the cusp of not incremental growth, but transformational growth in Mahindra & Mahindra?
So there are a lot, and we have delivered 11x market cap growth since April 1st, 2020. So from that standpoint, our focus is on building businesses the right way, and valuations will follow. The businesses that we see that can continue to grow well are actually all of them. Our auto business has grown dramatically. You've outlined many of the drivers of that growth. Our tractor business continues to be very strong. We had a market share in the early 40s or the low 40s, and it's up to 44% at this point in time. And we've got a good set of international businesses in tractor as well, a good set of businesses that are emerging like farm machinery. Mahindra Finance is in the last phases of its turnaround, and we are very soon going to pivot to delivering full potential for Mahindra Finance. It's delivered most of what we had outlined in terms of the turnaround. Tech Mahindra is on a good path to turnaround. Both of these businesses have tremendous potential and long runway in terms of being able to grow. And then our growth gems. Our growth gems started with a collective valuation of 0.8 billion in 2020. It went up to 3.4 billion 3 years later, was 4.2 billion last year. And we're targeting a collective valuation of 17 billion for the growth gems over the next 5 years. So that's really our growth path right now.
So I'm going to put this curve which Professor Ashwath Damodaran always speaks about, which is that companies, when they start at a startup stage, they become youth, they become young, then they reach the mature curve, and then they perhaps hit what could be called as a decadence curve. If you have to identify this curve for M&M group of companies, the businesses which you've incubated, which are young, which are youth, and which are mature?
It's all about perspective, Nikunj. It depends on how you define your market. You can define your market very narrowly and say that we've done very well in it and we are a very mature business. You could expand the definition, and you're suddenly a younger business because you've got a lot more room and runway to grow. So for us, all our businesses today have tremendous potential for growth. And let me give an example there. If we talk about tractors, we talked about the 44% market share we have in India, but we have a 6% market share globally. So if you look at India, we are a mature player. If you look at the global market as at 6% market share, we have a long way to go in order to grow further, and we have the strengths to do that. So that's how we're thinking right now, which is how do we take our strengths and how do we build very strong businesses going forward?
Mr. Shah, what you did once you took over was that you said, look, I'm going to be very strict. More like a headmaster. I'll be very strict about capital allocation. You give me value back, I'll give you money. You don't give me value back, I don't give you money. It's like this class monitor. Fall in line, otherwise you're out of the class. So it's worked beautifully. You've sold a lot of businesses. You've not invested in businesses which do not make sense. But incrementally, if I may use the word headmaster, where is the headmaster ready to invest? Where is he rating on, which are the class boys he's betting on?
See, first is this is exactly what all investors do.
Right.
And as an operating leader, it's important for us to be able to deliver that value for investors. So we've pruned out all the businesses that didn't make sense for us for a variety of reasons. And therefore, the businesses that we are in today are ones that we see a lot of potential in. And amongst these businesses, there really isn't a choice because we have a fair degree of capital we can deploy. And we are seeing very good progress across these businesses. So at this point, it's not a function of which one. It is a function of how fast will each one go.
I look at Mahindra and Mahindra stock, and it trades at valuations of an auto company. I don't know why. Do you think that's the realization which should kick in, that it's a holding company which is incubating new businesses? Because globally, I've seen some of these holding companies, they command a very different premium because they're strategic in nature. They have a vision. They're incubating a lot of businesses. Is that the pivot for Mahindra and Mahindra shareholders, that if auto is important, but it is not only auto, and like you've said, that it is less than 50% of the total business now?
So auto is a very exciting business, and it's always fun talking about auto, and that's what happens. But if we look at the reality of our numbers and go back and calculate our profits over the last 5 years, auto's contributed 1/3 of the profits. Our tractor business has contributed 1/3, and services has contributed 1/3, roughly. Services, in fact, is slightly more than the other two individually. So we have a set of businesses that play across multiple sectors in India. And we were looking at a strategic plan, and we actually play in 70% of India's growth over the next decade. And that's the reason why we are very bullish about these businesses. We are investing in many of them because we want to build scale businesses beyond auto, farm, Mahindra Finance, and Tech Mahindra. And we feel that our growth gems have the ability to do that.
Which are the future high growth businesses of India?
A host of them. So if I were to look at sectors, consumer, healthcare, renewable energy, logistics, hospitality, you could just look across multiple sectors and see a very high degree of growth across almost all of them. At the rate that India is going to grow, we're going to see multiple sectors having to play a role in that. But key in that is going to be manufacturing, because manufacturing has to grow 16 times in the next 23 years for us to meet the Viksit Bharat goals. And therefore, go back to our earlier conversation, we have to produce products in India that are high quality products and that can beat the best in the world.
Minus autos, where else do you think you would be able to scale up your manufacturing business?
Tractor. There's a strong degree of global growth from that standpoint. And for us, essentially, it's around, our focus is from a manufacturing standpoint on auto and tractor. And then we have a services businesses beyond that. And it's a combination of all of these that's going to deliver the growth that India needs.
Do you see your group pivoting more towards consumer also? Because the brand which you have, I think it touches every Indian consumer. The brand needs no recognition. Do you see that consumer pivot also very strong?
Possibly. But for us, it's more important right now to ensure that all our businesses today are growing at a very good pace, that we have the sharp focus on them. And we have talked about getting into one new area, and we are exploring what area that should be. Consumer is always going to be something on the table for us because our brand, as you mentioned, and the trust factor is very high. But we are always very careful about getting into anything new because we want to make sure it is at scale and it is something that will deliver higher returns for our shareholders than they can get anywhere else in the market.
You used the tractor example that, okay, 44% market share in India, but 6% market share globally. Mr. Anand Mahindra has tweeted in the past that every time you see a Mahindra vehicle, outside India, it's a very proud moment for us. Globally, at a time when global growth is uneven, where can you seize that opportunity?
So there are a number of markets around the world, and the same principle applies in global markets. If you have an outstanding product, that enables you to get a much higher market share. So at this point, given the demand in India, we haven't gone global in a very large way, but we picked certain markets. And in Australia and South Africa, we have a 5 and 10% market share, which is fairly substantial in the spaces that we play in. So we're starting to see that success in global markets as well. We still have a very long way to go. And for us, it's going to be a focused and a phased approach as we look at global. But the first thing is we've got to be able to meet the demand that we have from our customers in India.
And just to reiterate the outlook for 2025, the way you look at your business and your reading of the economy is that it will be a good year.
We feel that it will be a good year. We're optimistic. We're optimistic on India overall. We think that the long-term trends are very positive. We will see some short-term blips, as is always the case, but even through those blips, we see a lot of positivity. And therefore, we are betting big on India.
But I'm sure when the boardroom narratives must have started, that 8% GDP growth has become 6.5%, interest rates are stubbornly high, the consumer seems to be slowing down. Do you really look at these high frequency data points to judge how things would move?
Again, the question is, what are the long-term parameters? Okay. And if you look at the demographics of India, the ability for us to create high-quality products in India, the infrastructure that's coming up, the focus on ease of doing business, all of these will enable us to start capturing the potential that India has to offer. And I feel that the best years are ahead of us, that we really have a lot of potential in India that we can go forward with. And that's our long-term view, not some of the short-term indicators. That will always happen, but we think that we can work through those very well.
Okay. 2021 versus 2025, there has been an incremental and transformational change in the positioning of the group. The market share appeal, the shareholder appeal, the positioning of the companies, growth gems have been identified. But we've already narrated and discussed your fabulous journey from 2021 to 2025. Let's talk about 2030. 5 years, that's a decent enough time frame for a manager, for an operating manager to talk about. Hypothetically, if this is 2025 and I'm saying have a great 2030 ahead, where do you think the group would be positioned? I mean, I'm sure you have a vision in place.
So, Nikhil, I want to first talk about the past, because it's not only since 2020 or 2021. The Mahindra Group has had a great run for a very long time. We've been the fastest or the best performing stock in the Nifty from 2002 till 2018 as well. And that has been driven by entrepreneurship. The DNA of the group is a very strong one. It's been driven by values. We always talk about purpose as something that we lead with, and profits will follow. And that hasn't changed. So for us, that continuity is really what has helped us do very well. And as we think about the next 5 years, our focus is on building businesses. So while we talked about market cap, and for us, that will follow. We build businesses the right way, create the right set of products and services for customers, leverage technology and establish leadership in that space, have the best talent that's there. And that's something that we're very proud of today. And that is going to enable us to be able to show that level of growth where we would look back 5 years later and say that we're very happy with what we built. And for us, the important aspect also is to build long-term businesses.
Of course.
We are not focused as much on what happens next quarter and what happens next year. Yes, there is some element of focus because our investors look at that, but that is something that we are open to explaining to folks, saying here are the choices we are making, and this is the reason why we are going down a certain path, because it's helping build a better long-term business.
So let's talk about those choices and then we'll wrap it up. I know you've got extended appointment, you have extended appointment with you. One choice is that you would continue to invest in autos, whether it is ICE, diesel, petrol or EV. Second is that you would now, you've identified your growth gems and you will propel those growth gems. You've already spoken about healthcare, logistics, manufacturing, which are going to be the key areas. You've identified that the businesses like Mahindra and Mahindra Finance and Tech Mahindra are at a cusp of incremental and transformational change. What else? What else we should expect in terms of a pivot, which could be an impact of AI, productivity, new markets, new areas? What else are you thinking which you're not telling us, which you're not sharing with us?
So first, isn't that enough, Nikhil? Right? With auto and farm growing at that pace, with Mahindra Finance and Tech really going on a new path.
Stock, everybody wants to know more.
With growth gems growing and scaling at a large pace, that actually is a huge set of things.
Okay.
Right? And for us, it's about doing less, but doing that very well.
Okay.
We want to build large businesses with our growth gems. We want to make sure Mahindra Finance and Tech are leading in their industry. And we want to make sure that in auto and farm, we capitalize on the market leadership and grow globally. So that is a fairly significant set of challenges. Yes, there will be more, but let us continue to focus and deliver well on these, and we shall come back with more positives beyond that.
But just to put a very ballpark number here, and I'll take the liberty of asking one more question, which is that if India's GDP, nominal GDP, is growing anywhere between 12 to 13% or 11 to 13%, depending on the yardstick which we use, can we say that for the Mahindra and Mahindra group, that's the bare minimum? Because
that has to be the bare minimum.
There is the bare minimum. On that, there would be experience, vision, implementation, and then technology, which means I can add another 3-4%. So 15 to 18% becomes like the hurdle growth for next 5 years.
So the commitment that we made to our investors is that from 21 onwards, we will grow EPS at 15 to 20% every year.
Which is what we are coming to. Actually.
And we will maintain an 18% ROE. And yes, ROE, we've always said, will have some blips based on investments that we make, but that is a long-term view. And that's something that we have delivered very well so far, and we feel comfortable moving forward with that as well.
Can you commit a 5-year kind of a CAGR growth of 15 to 18%?
I'm going to stay with my forecast from 21 onwards. We're going to stay with 15 to 20% EPS growth and 18% ROE.
But that forecast from 21 onwards, what is shelf life of it, is what I'm trying to understand.
At this point, the foreseeable future. So that continues over the next many years. And as we build the right businesses the right way, we hope that we can continue delivering that for many years to come.
So you've given me a punchline that 15 to 18% growth in the foreseeable future for many years to come is something which you're ready to commit to at the beginning of the year.
I would state our commitment, which is from F21 onwards. Our EPS growth is 15 to 20%, and ROE is 18%. So I'm just being very careful in our commitments because we're always going to be held up to them. So that is the exact commitment that we have made, and it is a commitment that we continue with.
You'll appreciate that I have to wrap it up with just clarity on this one. You use the word foreseeable future. So the commitment of the growth band, what you've given us, you see growth in the foreseeable future. And when I'm saying foreseeable future, 2, 3, 4 years, you see that kind of a momentum to continue.
That's correct.
Okay.
That's correct.
Thank you very much. I think we've really covered a range of topics. You've been very generous with your time. So have a wonderful year ahead. And you've really made the impossible look easy. I've had the pleasure of tracking the Mahindra Group for years now, but all I can say is that the vigor, the energy, the whole implementation, and more importantly, the whole talent pool what you've created in the last couple of years is quite extraordinary.
Thank you.
Thank you very much. And with that, it's back to the studio.